Transforming the future, reshaping the communities. That's the word Gamuda Berhad lived by up until today in running and making their business successful. Welcome to our video of Gamuda Berhad Company Analysis. Hi, my name is Nadia binti KHAIRUL Anuar, and joining with me today.
Hi, my name is NURUL NATASHA binti ROZAINI.
Hi, my name is SITI binti ABDUL HAMID.
Hi, my name is SITI NURDIANA binti Muhammad Kamal.
And hi, my name is HADIRA binti Muhammad SHAHIR from BA2424E. Let me begin this video with a brief explanation about what is financial statement analysis and why we are choosing Gamuda Berhad as a company to be analyzed. Financial statement analysis help the internal and external stakeholder to see the performance and value of business. Other than that, it also helps the stakeholder to decide regarding to investment. We are choosing Gamuda Berhad as a business to be analyzed because it is one of the largest infrastructure companies from Malaysia that have proven track record of delivering innovative breakthrough solutions worldwide. From this analysis, we want to see and learn the performance of Gamuda Berhad in managing their asset, liability, profit, and shares. Besides that, we want to see how the business managed their operation during pandemic of COVID-19, whether the business performance is good or vice versa.
Gamuda Berhad is an engineering property and infrastructure company based in Malaysia. It is one of the largest Malaysian infrastructure companies and has done many local and overseas projects. For example, Klang Valley MRT lines, highways, airport runways, railways, tunnel, water treatment, infrastructure concession, and the development of new township. It was incorporated as a private limited company on 6 October 1976 in Ipoh, Perak. Gamuda Berhad took almost 16 years after its operation to get listed on the main board of the Bursa Malaysia, and it made it to the Bursa Malaysia on 10 August 1992. Railways are playing an essential part in the development of Malaysia's public transportation system, which is being overhauled by the Malaysian government so that the country will be fully developed by the year of 2020. Using rail is one of the most fuel-efficient modes of transportation as it avoids traffic and reduces the gasoline use. Consequently, the Klang Valley Mass Rapid Transit (KVMRT) is established as an entry point project of the Economic Transportation Program (ETP) under the Greater Kuala Lumpur or Klang Valley National Key Economic Area (NKEA). The latest milestone of Gamuda Berhad is the former Prime Minister Tun Dr. Mahathir officiated the opening of Gamuda's digital IBS plant in Banting on 2nd May 2019. With the nation's first digital IBS facility in Sepang, Gamuda IBS is Malaysia's leading end-to-end digital IBS solution provider. Gamuda IBS can build even public institutions like schools and hospitals because the company can produce a wide range of items. Now, before we move to another point, let's see the organizational structure of Gamuda Berhad and what are the achievements and awards that have been received by the Gamuda Berhad since the first year they have been incorporated.
Now we will talk about ratio analysis for Gamuda Berhad. There is 4 ratio that we will talk about, which is liquidity ratio, solvency ratio, efficiency ratio, and profitability ratio. first ratio that we will talk about is liquidity ratio. Liquidity ratio refers to the ability of a company to pay its short-term obligation using a current asset such as cash or assets that can be easily converted into cash. According to Gamuda Berhad's current ratio, the two consecutive years have shown an uptrend from 2020 to 2021, which indicates that the company is excellent and able to pay the short-term liabilities. In 2020, the current ratio was 1.62 times and increased to 2.21 times in 2021. It achieved the highest current ratio in 2021. The company has 2.21 ringgit of current assets to cover every 1 ringgit of current liability in 2021. It shows that Gamuda Berhad has successfully maximized its current assets. Next, the quick ratio for Gamuda Berhad in 2021 is 1.53 times compared to the previous year, which were 1.12 times. This has shown that the ability of the company to pay its current liabilities without having to rely on the current liquid assets has increased and become better each year. The quick ratio for the company is higher than 1, which indicates the company is liquidated to pay off its current liability instantly. Other than that, the sales to inventories for Gamuda Berhad shows that it has 353 days in 2020 and 393 days in 2021 taken to sell off all its inventories. The company has a high days sale inventories, which indicates that the company is not properly managing its inventories or has inventory that it's difficult to sell. So, they need to improve through effective marketing and proper forecasting. As for net working capital, it has shown an increase throughout the 2 years of data. From 2020 to 2021, it has gained from 3,639 ringgit to 5,414 ringgit. The company keeps the positive momentum as they show an increase for 2021 with 5,414 ringgit. The increase might influence this sale revenue and inventory efficiency. The high and positive value of net working capital will help the company to be able to pay its short-term liabilities. Next is solvency ratio. Leverage and debt ratio measure a company's level of debt and its ability to fulfill and pay for financial obligation. Based on the reference that has shown, the highest debt ratio was in 2020 and keep constantly decreasing for the years in 2021. Can be seen as the debt ratio in 2020 percentage is 51.16% per year, while the percentage for the 2021 decreased to 48.35%. The reduction in the debt ratio means that the business may minimize the debt of the businesses, while on the other hand, a high ratio also indicates that the business could put itself at risk. Next, the debt equity ratio is 2020 is 106.60% and decreased to 93.61% in 2021, as it also has been stated as the lowest compared to the previous years. Thus, the lower the debt equity ratio, the better performance for the company. Thus, Gamuda Berhad has shown the company is less risky to the investor as they can reduce the company's long-term debt. For times inter-earn ratio, Gamuda Berhad has recorded its highest ratio in 2021, which 9.57 times that has indirectly shown that the company can cover its interest payment of the year, as the company has 9.57 ringgit available cover every ringgit of interest expenses. In 2020, the ratio was 6.67 times, which is the lower times interest earned compared to 2021.
The next ratio is efficiency ratio. The asset management or activity ratio measures the efficiency of a company in using asset to generate sales or cash. For total asset turnover, Gamuda Berhad efficiently used its asset to generate sales for the company because the turnover rate for 2 years was below 2 ringgit. In the year 2020 and 2021, the amount is 0.40 times, which show the company cannot generate more sales from its asset investment. Further, for fixed asset turnover of Gamuda Berhad in 2020 amounted to 0.40 times and 0.40 times in 2021 respectively. The higher the fixed asset turnover, the better or more effective the company uses fixed asset to generate sales. The company shows that the ratio has stable fixed asset turnover, which stays 0.40 times from 2020 to 2021. As can be seen, the account receivable turnover in 2021 is the highest compared to the previous year 2020. The amount of Gamuda Berhad turning its receivable in 2021 is 1.12 times a year, while in 2020 is 1.10 times. It shows that the company has better performance and can collect debts or credit sale from their customer. Subsequently, the inventory turnover in 2020 was 1.04 times, while for the next year 2021, it declined to 0.93 times, which indicates Gamuda Berhad was not efficient in generate sales and could not manage inventories as the inventory turnover was dropping. Lastly, the average collection period of Gamuda Berhad in 2 years is decreasing for the year 2020 as the amount is 328 days. In 2020, the company was not good as the company managed to collect its receivable in 328 days, more than 30 days, the most common credit terms, but as it compared to the following years in 2021 are good when it continues to decreasing from 328 days to 323 days. This shows that Gamuda Berhad can collect the debts within a shorter period. Another ratio is profitability ratio. Profitability ratio measures a company effectiveness in generating profit from investment and sales. Firstly is the gross profit margin. The gross profit margin for Gamuda Berhad company has been recorded as the highest in 2021, which is 25.21%, which increased a bit from 23.10% in 2020. The lower gross profit margin shows that the company is not efficiently converting the revenue into profit due to the company performance in 2020 amid the pandemic that happened. Next is the net profit margin. The net profit margin for 2021 was the highest, which is 16.72% compared to the previous year, which was 10.29% in 2020. Thus, the higher the net profit margin, the better and more effective the company generates net profit or earning after tax. Furthermore, the operating profit margin in 2020 was 16.11% and has increased to 22.35% in 2021. The operating profit margin is the portion of the operating profit generated from the sales. As 2020 has the lowest operating margin, Gamuda Berhad operating expenses are higher than the previous year. Gamuda Berhad company has recorded in 2021 as the highest return for the return on asset, which is 3.19%. This led to the company generating 0.0319 ringgit profit for every 1 ringgit investment in asset. In 2020, the ratio was 2.03%, which the lowest return on asset ratio might be because of the over-invested asset that have failed for revenue growth. Lastly, the return on equity in 2020 was 4.20% and this shows that the company can generate a profit of 0.0420 ringgit for every 1 ringgit of investment from the company equity. However, the ratio increased to 6.80% in 2021, which shows that the company can use its total equity to generate net profit. Also, the company were able to generate net profit for its shareholder.
Based on comparative income statement above, the sales of Gamuda Berhad year-to-year decreased by Rm 754.36 during 2021 as against 2020. The changes in percent for the sales in 2021 also decreased from 19.74% to 4%. Thus, the gross profit for Gamuda Berhad increased significantly from Rm 846.99 in 2020 to Rm 886.57 in 2021. This shows that Gamuda Berhad has a higher gross profit and more capital the company retain, the more company can pay other costs or satisfy debt obligation. In addition, the company expenses appear to be in orders, but marketing costs are the highest than the rest. We can infer that the company marketing strategy is quite aggressive from this information. Low interest rate may indicate that the company is more careful not to take too much debt. The company overall performance for the year ended 2021 is higher than before. Therefore, the earning after tax increased from 46.23% to 56.26% for 2021. Next, as we can see in the comparative balance sheet above, the total asset of Gamuda Berhad have decreased by Rm 104.08 in the years of 2021 over 2020. On the other hand, the total liabilities and equity have decreased from Rm 18,527.56 in 2020 to Rm 18,422.57 in 2021. Now, such a change does not harm the liquidity position of Gamuda Berhad. This is because of the current asset have decreased by 51.42%, whereas the current liability have declined by 24.32%. Last but not least, the long-term debts of Gamuda Berhad has increased by 20.53%. On the other hand, the owner equity has improved by only 30.09%. This indicates that the company is too dependent on the external lenders.
Next, before we go to the part of recommendation, let me briefly explain the strength and weakness of Gamuda Berhad based on the financial statement analysis. Firstly, Gamuda company has a good management in handling their liquid assets such as cash. From data of common size, it shows an uptrend of cash and cash equivalent from the year 2019 until 2021. It shows that the company have made an improvement from year to year, especially after pandemic of COVID-19. Other than that, current ratio also shows an increasing from 1.6 times in 2019 to 2.21 times in 2021. Next, Gamuda Berhad also shows the ability of liquidity by positive value of net working capital. It shows that the company has many values of current asset than current liabilities. From 2019, net working of Gamuda company is 2,988 ringgit Malaysia and 5,440 ringgit Malaysia in the year of 2021. It means that the company is liquid and able to meet short-term obligation. Besides that, the strength of Gamuda company is from their account payable. It based on data of index number where it decreasing from the year 2019 to 2021. It also shows in-depth equity ratio of Gamuda company, which is 102.95% in 2019 and decreasing to 93.61% in 2021. It's a good performance for a company because even the company have made an uptrend in their long-term debt, but the account payable is still in good condition. However, Gamuda Berhad also have a weakness based on the financial statement analysis. Firstly, in terms of their inventory. In inventory turnover, it showed and decreasing from the year 2019 to 2021. In 2019, the inventory turnover is 1.36 times and decreasing to 0.93 times in 2021. It shows that Gamuda Berhad did not need to turn over their inventories in many times for a year. It also related to amount of sale that also decreasing for year to year. Secondly, Gamuda Berhad also have a weakness in terms of interest expenses and long-term debt. Based on the data common size of financial position, it shows an increasing of long-term debt, which is 20.53% in the year of 2021. Then, in the financial ratio of time interest earned, in 2019 it was 50.60 times and 9.57 times in 2021. The decreasing value of time interest earned ratio may indicate the company will be hard to pay the interest payment as they come to due. Then, there are two recommendations that we are suggest to Gamuda Berhad for improve their performance in the financial statement. As we know, Gamuda Berhad is one of the largest Nation infrastructure companies and has undertaken various projects both locally and overseas. However, based on analysis that we have observed, Gamuda Berhad have a decreasing amount of sales from year to year. Due to this, Gamuda Berhad should start to expand their business to get a huge project in Malaysia or international. From their experience of managing project, Gamuda Berhad has shown their ability in manage of this project successfully. Due to this, Gamuda Berhad have an ability to increase their sales. Lastly, due to the increasing in long-term debt, Gamuda Berhad shows a bad performance when the interest expenses of the company also increase. It is based on the decreasing of time interest earned ratio that indicate the company might have a difficulty to make a payment of interest expenses. It will be good if Gamuda Berhad can find a loan with a low interest because it can help them minimize the amount of interest expenses. Other than that, Gamuda Berhad also can issue a debt financing or bond to help them get income to operate their business.